Bring that ass back like a boom, 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 boom.
Alright guys, happy Sunday. Supernova here with Boom Traders. This is the weekly overview for week number 40, October 9, 2022, and let's get it going. This is a session overview, models, market price action, internals, notes, sentiment, seasonality, and summary at the end. I'll try to make this short and sweet. There's not much to talk about. But starting with the risk models, we have them on sell signal, general market negative, up down volume, new highs, new lows, stock participation all negative. Trading environment hard penny, so if you're trading breakouts or swing trades like we do, it's extremely hard to make any money. If you're day trading, you might have some luck, and if you are extremely long-term position trader, you might actually be thinking about buying some positions right here, just starting to pile on. As far as the models concerning long, mid, and short term, they're all negative. Remember last Sunday we had the short term were neutral. I told you that if we undercut the lows made the prior Friday, we're gonna move this to negative. And I wasn't really sure that we're gonna start Monday really hard down. So actually what happened is we rallied for the first 2 or 3 days, but market rolled over again. And we had no choice but to move this to negative. So this is what the models are showing. Now, let's take a look at some market price action. So what we have here is the S&P, QQQ, and IWM, and let's just first start with the chart of the S&P 500. And if you look, this is what we had last week. So this was the move on Friday down, and I told you I'm gonna keep the short-term market model on neutral. Just because I wasn't sure that with this extreme volume here, this capitulation volume, I wasn't really sure that we are going to go lower anymore. And what really happened on Monday was we gapped up, so that was kind of screwing all those people that went short on Friday. So market gapped up, and then another gap up, and then Wednesday we reached a prior low right here. You can see on high volume right here, and this low has been touched a couple of times. I just kept the line here because this was a really extreme reaction here of this volume. And on Wednesday, basically what happened is we touched that low. This is also the 20-day moving average. We also have this dotted lines. If you can see right here, we have this resistance on top with the only actual bar closing above it is this basically island reversal right here, lonely candle formed by two gaps, gap up and then gap down. So it's a really abrupt reaction right here to the market action. So we have all those zones here that are converging, and we rejected. Now we still haven't undercut those lows right here that were the reason for keeping the short term on neutral. But I think that after this 3-day consolidation, I think that you can see what is happening right now is pretty similar to what we have right here. So if you take this as a so reaction, and you have this bar right here encapsulated by two gaps, as you can see right here, the gap up and then you have the gap down. Basically what's happening right here is the exact same thing, but we don't have a single bar. We have like 3 bars right here. So this is the action on Tuesday, Wednesday, and Thursday, and you can see they're like the huge gap up, and now it's a huge gap down. So this is quite bearish in terms of market price action, and I surely expect that we might find some support right here in this lower band right here of the zone. So let me just draw that, and I'll use this low right here because it's the lowest. You can see we actually stopped right there, but we might find some support right here, but I definitely think that we're going to undercut this low this time. That's why I have it. We have this model right now on negative, the short term. So now also remember that it wouldn't be surprised if we actually open a little bit higher on Monday, because usually those gaps and those extreme moves are followed by some reverse action on the next day. But I don't think this will hold. So don't freak out if the market gaps a little bit higher in the morning on Monday. Just be careful and patient and see where it takes you. For QQQ, pretty much the same thing, and you can see basically this resistance on top is respected. Now we were able to move past it, but we were never able to close above this close right here, which you can see right here. There's a gap, so this is some sort of resistance. It held on 3 times. So Tuesday, Wednesday, Thursday rejected. You see, we tried higher, and you can see like these are higher highs right here. We tried even higher, then rejected on Thursday. Huge gap, and you can see where the gap is. I mean, this is just insane. You can see where the gap is. It's just right here. This is the Monday high. This is Monday high. Gap on Friday, open below Monday high, and then we close. Now the good part is that we weren't able to basically close below the low of Monday, but I think it's coming. I mean, you can see it right here. Volume is picking up. Negative volume is picking up right here. And I think that once we undercut the lows, which are basically right here, this level is, just see if I have it, is 269.28. We already closed below it. Now we just need confirmation to undercut the 267 low. And from there, there are some zones to the downside. I'll give them to you tomorrow in chat when I do my profile work to see how the my market profile is stacking up and see what zones we have. As far as IWM is concerned, exactly the same thing. I mean, it's just mind-boggling how good those lines do work. They rejected here. We have this little action right here. Now, as far as strength is concerned, by far IWM is stronger than SPY and QQQ. You can see this gap down on Friday, although we rejected with the 20-day moving average. Although we rejected, here we have this gap down that actually gapped in the middle of nowhere and continued lower, but we are still above this support zone right here. If you drew this this zone right here, we are above it, so we still have it closed. And there's like this trend line that is coming right off of here. We're also above it, so these are some zones that this might actually stop. Now volume is lower than the average here on IWM, which is in contrast to what we have here on the S&P 500 and what we have here on QQQ. So this is holding a little bit better, but still not good at all. Now let's talk about some market internals. And I haven't changed for you from TradeStation. I just want to move to Thinkorswim. So we're basically looking at the same thing. And I try to basically cram everything I have there with some modifications, because there are different tickers that I can use. But what we see right here in top left, this is the put call ratio. Right now we are at 0.97, and this is the 5-day moving average. Every time I see the 5-day moving average approaching 105, I know this is extreme hedging, and I am expecting some reversals in the markets. However, right now we are right here at 0.97 to 1, which is not highly elevated. So in order to find the bottom, we definitely need it higher than this. Here at the bottom, what we have is the highs and lows. So it's basically the New York Stock Exchange high minus the New York Stock Exchange low compared to NASDAQ high minus NASDAQ low. And what is really important here is basically this line right here. I don't really have it drawn right here, but let me just put it here so you can see. Okay, I just hit it at 0. We'll just make it, they don't have the standard red on Thinkorswim. That's really a bummer, but they have it right here. And let me just extend it to the left. Boom. So right, this is 0. So if this is 0, that means that the highs minus the lows, this is a neutrality between highs and lows in the market, both for NASDAQ and for New York Stock Exchange. And you can see that ever since 2022, the beginning of this has been predominantly on the negative side. I mean, you can see the difference. It's always on the minus. There's been a couple of times where we've reached like 200, so basically that means that we have like only 200. The difference is only like 200 stocks that are making more net highs minus the net lows. But in general, this has been negative for the majority of the year, which tells you pretty much, I think, enough for what this market is made of right now. And I have, the New York Stock Exchange line is the white line, and the well, I'm sorry, the New York Stock Exchange line is the purple line. The purple line, the white line is New York Stock Exchange. Is Nasdaq? I'm sorry. So purple. Let's repeat for one last time. Purple, that's New York Stock Exchange. White, that is Nasdaq. So Nasdaq's performing a little bit better than New York Stock Exchange, but I don't think it really matters. I mean, you can look at that and just that's devastating for stocks. Right now here on top, middle top section, I have VIX. So this is VIX. You can see VIX is pushing forward again above 30. And what is actually more worrying for me is that this midline, this is Bollinger Bands. I use Bollinger Bands for VIX a lot. This midline right here is just trending upwards, and that's what actually bugs me. It's not that much, the moves of VIX up and down, up and down, up and down, but this midline is pretty much moving upwards. So it's basically a 20-day moving average that is sloping upwards. And it's pretty consistent. You can see same thing on the reverse right here on top. We have the SPX, S&P 500, whatever. This midline is like trending downwards. What we have right here on these two columns, this is the up-down volume for New York Stock Exchange, NASDAQ, RUT, and Dow Jones. And we have also moving average right here. Just slapped it for easier to look. There's are all negative. As far as this bars right here, this is New York Stock Exchange advanced decline issues. They're all negative. You can see minus, that was on Friday, that was minus 2,210. NASDAQ on Friday, I don't even think you can see the bubble right here, minus 2,890. This is IWM, RUT, so small caps, minus 1,413, and Dow Jones Industrial out of 30, 28 to the negative. So we only have 2 positives and 28 negatives, and that's for Friday. So these are advanced decline. This is the up-down volume, and you have here 2 tickers that Thinkorswim is providing for you. This is the percentage of stocks above their 50-day moving average from the S&P universe. So you have 12% of stocks are above their 50-day moving average, and 16% of the stocks are above their 200-day moving average. So this basically tells you all the story that you need to hear. There's no need to boggle down with other complicated indicators and stuff like that. Let me just show you for a quick second. My breadth trust indicators, so you see what they're showing as well. But I think it's pretty obvious at this moment that the market is not in good health. So right here, you remember I showed you a couple of weeks ago, this is the comparison between SPX and NASDAQ composite. NASDAQ being the white, we cleared that the previous graph, and SPX being the purple. Every time in history, basically NASDAQ was overdoing, outperforming SPX. We had good bull runs, and every single time that SPX was outperforming NASDAQ, we had bad times. So right now SPX on top, this is for the entire 2022. SPX on top, basically that gives you a clue, not a good run. So just try to stay out of the market. And here are my oscillators. They're pretty much all of them are even the McClellan oscillator and the spike breadth thrust, the ZBT, they're all based on some relationships between advancing and declining issues. So they all give you pretty much the same graph. If you can see right here, there's some alterations, but in general, the idea is that we are close to oversold right here on 2 of my oscillators. ZBT is also close to oversold. And McClellan is moving through the lower band below 100. Right now at minus 115, and once we see it past minus 300, McClellan becomes extremely oversold. Now we're expecting a bounce. You can see that spike breadth thrust every time we get to about 36, 35. This is extreme oversold. My extreme oversold on my first indicator is right here. It was achieved a couple of weeks ago. Right now we are in the green zone for the oversold, so becoming mildly oversold. And this one that is very close to the spike breadth thrust is also oversold. So we are getting there, but I think that there's still more to come on the downside. So as far as notes, I only have one thing, and this is the Criema bridge bombing that happened early yesterday, I think. And the problem we have with this is that Ukraine has actually actively taken responsibility for this bombing. Now, the good thing is that Kremlin or Moscow or Putin, whatever you want it, haven't really responded with force, and they haven't been really how to put it. They haven't been really threatening in their comments right now. They're coming up with a commission to investigate and come up with solutions and so forth and so forth. As far as the news goes so far, the railroad is not destroyed, which is I would say it's good because this allows for Russia to still move goods through the bridge. But it's also bad. I think that what Ukraine was trying to accomplish with this bombing was to basically destroy this bridge and cut off Russian forces from being able to supply with military and food and so forth and so forth. Now this didn't work out, I guess, but nevertheless it was an act that might be interpreted a little bit harsher from Putin. So I'm still expecting some reaction from it, and having this conversation about tactical nuclear weapons being thrown into the battle recently, I think that this can just escalate the pressure a little bit more. Tensions are going to rise a little bit more, so I'm expecting the market to be a little bit spooked on Monday just because of that. And this is what I have for my notes. We talked about the market. I mean, it's in a really desperate situation. Notes. These things are just adding pressure to the entire situation with the market and the Fed. As far as sentiment goes, you can see bulls versus bear. There's not much of a change. I mean, there's a little bit less bears compared to bulls, but remember, this is the last week. This is not this week. They go 1 week back. This is the American Association of Individual Investors. As far as CNN Fear and Greed Index, we're at extreme fear 22. Bitcoin dropped 2 more points from 24 to 22 last week. So it's fearful. I mean, and I understand it. People are scared. Market's going down. Feds are, keep on with the rate hikes despite the backlash that we have from some prominent businessmen like Elon Musk. Given that he was talking about the Feds as well last week, and we also have other people complaining that the Feds are going to basically kill the economy with this in their terms unnecessary hikes. And last but not least, let's take a look at seasonality. We've been repeating this for pretty much the last half a year. The cycle work for NASDAQ suggesting early October we have a turn, and then we're not looking back. It's like a rocket off she wrote. Dow Jones presidential elections, 4-year presidential cycle, same thing right here. This looks like October, November to me, and then we move up. So it's all looking according, especially if you're following these presidential cycles and the cycle work from the day research, so looking like rosy stuff. We might bottom here. I don't know. The market's not suggesting this to me, but you never know. We have to approach this on a day-to-day basis. So let's do the summary. Models, sell signal, setups almost none. Although there are some setups that are proliferating, but I don't think that you want to buy strength into such a situation right here. When we had a couple of breakouts, we bought them and they just squatted on us. The market's selling. Put volume is high, but not extremely high. Volatility is high and unfortunately getting higher. I showed you that 20-day rising moving average on the VIX signal. And as far as other things, of course, recession, Fed hikes. But as I said, the Criema bridge bombing, I think this is the most important issue that happened overnight. And for now, cash is king. Cash is a position. Remain patient. There will be better times ahead of us, that's for sure. So I hope you liked what you saw. I hope this was beneficial for your trading. If you like it, please subscribe to our YouTube channels. Come to Discord. where you can chat with a lot of great people and great traders and find some trading ideas, or at least do something while the market is in this situation. So you can be patient with our members. So if not, I'll see you here next weekend. Bye bye.